Yes. I got two cameras going, kind of looking at each other. It's what you call multitasking, right? Maybe try to get two pieces of content out of one. Let's mess this one up. A lot of times when I do this, I fuck it up. A lot of times. Nothing to look at with stocks, man. We gotta wait till tomorrow. Now, you probably, move this camera. You probably have never heard of a book called The Master Key. It's really fucking hard to read. But the opening chapter is really cool. I mean, it is, oh, my chair. The opening chapter is really cool. And it's mindset stuff, right? If you're gonna be successful, fucking anything, being a musician, being a salesman, come on, man. Sales, you can learn a script, but sales is about the way you approach the script, your commitment to the script, right? Your commitment to the sales process. And a lot of that is about mindset, right? So we all need mindset, man, whether it's in anything. And so it definitely should be a part of something that you know, somehow find a way to feed your brain. And it doesn't always mean motivational shit, you know, it could be music, man. The problem with stuff like that is if you're just always listening to music, you're not hearing words, and words are super powerful. Words in your own mind, words that people speak to you, the written word, right? You go back to the Bible, it says in the beginning was the word, right? Like there's something special about the way human beings interact when they see a word, hear a word. You know, music probably can speak words. A scenic vision could, you know, a picture, a painting in your mind could speak words. Often, mostly those convey a feeling or an emotion. Music can get you pumped up and you're like, come on, man. Like that's an emotional thing, right? But words are different. And words can make you emotional. Words could trigger, you know, same thing maybe music does. But they kind of operate separately. Now, you might combine the two. You might listen. I have a hard time reading with music going, personally. That's just me. And if you have my free ebook, you don't have to die broke. I mean, it's free, man. Hit the bio link. I don't try to get you to buy shit. Unless you want one of these that I sign, I'll send it to you. But that's $20, man. And even on that price of the book, I don't make shit. But I know if you read this, you're going to change your life. And if you read this, you'll probably buy the next one. Right? What is that? Sales. What is that? You need a little bit of mindset, man, to go stand in front of people and go, hey, look at me. Let me show you something. That takes a little bit of mindset, right? In chapter 9, is it 9? Yeah, chapter 9, dealing with financial fear. It opens with, we have discussed protecting your wealth through diversification through, I gotta fix some, this is bad writing, through assets and separate accounts with different objectives. If you ever want to check your own writing, just read it out loud and you realize, okay, I got issues. Now we need to discuss the possible most prolific stealer of wealth. That is fear. Financial fear is responsible for robbing more of the world's wealth, in my opinion, than any other event. Fear of losing something of value is completely natural, and it is also healthy if the fear is not too great. Fear is an instinct to help us survive, but when fear immobilizes you to the point that you can't act or make foolish, rational acts, we could add, it is no longer a help or healthy. Unbridled fear produces two, not one, two negative responses. Immobility, I get this. Rashness, I don't get that much. I'm gonna be honest. What does it do? It causes you to freeze up or what? Do something rational. I don't really have that. Maybe I did when I was younger. Now it's more, I'm immobilized. You know, I'm just like, fuck. You know, you don't know what to do. The master key. So chapter 9, we're talking about financial fear. And we need to recognize this is real, man. In your own business, right? In your own business. You know, shit, Instagram just took my main account down. Said, here's the reason why. All you fuckers were reporting these fake accounts, and they took down mine as the fake account. And so they left up the fake account and took down my account. That's the reason. Fuck. But anyway, we push forward. right? That's what we do in business. It's what we do in life. We ain't got a choice, really, man. We have two choices. If you have fear, you can be immobilized, right? Or you can make irrational decisions. One of the great things about building wealth and being a person who thinks about building wealth, investing in stocks, index funds, and there's all kinds of shit in that, REITs, closed-end funds. I just put some money in a closed-end fund this month or this week. GLV, we talked about that on YouTube. We talked about we like to buy those when they're cheap, when they're trading below. These aren't stocks like Home Depot and Lowe's that are going to double and triple, or a Pepsi or a BX. It's a different kind of asset. It just throws off some money. And, there's rental property like that. Doesn't really appreciate. The closer you get into the hood, the more you get into these areas that are more financially challenged, we could say. The rougher the area, guess what? Cash flow goes up, man. Right? But it's a lot more management. It's a lot more hand-holding. It's a lot more hands-on. It's less passive, so to speak. But if you have really fancy Class A things, most of the time those people are making their payments, Now, here's the problem. They each come with different risk, and based on how much, how involved you are is the return. And so a closed-end fund doesn't come without risk, and there's a lot of people that don't like them. So I wouldn't put all my money in them, no more than I would put all my money in Bitcoin, no more than I would put all my money in real estate. I haven't even done that. There's times I think about it that I should have, and there's times that I think about, there's been many times where I'm like, fuck, dude, I should have put all that money in that fund or that stock, All right, so master key. That much gathers more is true on every plane of existence, and that loss leads to greater loss is equally true. Boom. That much gathers more is true on every plane of existence, and that loss leads to greater loss is equally true. Think about that. You ever notice people that have a lot of money seem to keep making money? Meaning the very fact that they have money makes making money easier. Let's say you got $1 million invested in 30 things. You own 30 things that are worth $1 million, and they all pay you 5, 10. Some of them maybe pay you 20% because they're involved. Some give you a little 3% drip. Some are this, some are that. But cumulatively, all this money comes into you, right? Guess what happens? The more of that you have, the more of that you have. Like, it builds on itself, man. They call that compounding, if you want to get technical. But in the book, this is how he says it. That much gathers more is true in every plane of existence, and that loss leads to greater loss, to equally losses. He says, what does he say? Hold on. And that loss leads to greater loss is equally true. This book was written a long time ago, so you have to excuse some of the weird language. What he's describing there, in another sense, is a trend. As things go up, they tend to keep going up. And if things are going down, they tend to keep going down. And if you ever notice, that's kind of one of my strategies. So inside the money flow, I'm like, if it's in an uptrend, it's going up. And they say, yeah, but it might go down. All right, but it's going up right now. So I assume it keeps going up. And I make my decisions based on the idea that it's going up. If it just started, I might want to buy some more so I can ride it up. If you get what I'm saying? If it's been going for a while, I assume it's going to keep going, but maybe I'm looking to take some gains. And so, or what? We just assume it keeps going, though. Man, that much gathers more. Those are trends. Well, in money, people that have money just start making more money. Meaning, if you had, let's say you have 10 properties, 10 houses, 10 doors, whatever you want to call it, paying you money. Do you think it's easier to get the 11th than the guy that doesn't have one? He's saving to buy his first, and it's a big down payment. He's saving. Versus the guy who's saving to buy number 11, and the other 10 are throwing him money, which makes him buying number 11 even faster, right? What is that called? Compounding. What he's saying here, that much gathers more is true on every plane in existence, and that loss leads to greater loss is equally true. Well, let's say the other guy doesn't save, doesn't invest at all in nothing. Not index funds, not stocks, not real estate, nothing. He invests in nothing. Not Bitcoin. He's not trying to figure out which one's the best investment or what is the best possible return or what is the smartest thing. He's not doing nothing. None. So think of that. Guess what that means? That loss that loss leads to greater loss is equally true due to powers of inflation, buying power, meaning they're going to raise your rent every month, man. I don't know if you know this. They're going to keep raising your rent. I keep raising the rent on my renters, just banging them. Why? So I can keep up and exceed inflation to make profit. Well, if they're just renting, leasing, not saving, overspending, they're not at zero. They're actually behind zero because of the value of the time they've lost. Me too, man. So I've lost a decade, right? From age 20 to age 32. Now, I started trying to get out of debt at age 29. He said, Uber. Gerald, let me interrupt your class and just yell odd words at you. I know you're giving us a class, but Uber! Imagine you're in a class. You can only do that on social. Like you're in a class, you're in church, guy's preaching away, and you're like, hey, man. You just start yelling at him. So in chapter 9, I talk about dealing with financial fear. We've discussed that protecting your wealth through diversification through assets and separate accounts with different objectives. It didn't say every account has the best possible fucking objective, must be right, the highest return on our, like, no, it's not what it says. We need to discuss protecting wealth through diversification through assets in separate accounts with different objectives. The Bitcoin account has one fucking objective, right? And how I handle that is based on the Bitcoin mandate. What is our plan with Bitcoin, right? With my buy and hold account, you say it's on a sell signal. I know, but I don't sell it. What do you mean? In this account, I don't sell, bro. I just collect dividends, but I don't necessarily buy either. Meaning I wait for stage ones. Go look at Home Depot. We were talking about this in Discord today. Home Depot, Lowe's, right? You're in Discord with me, right? We're talking about Home Depot, Lowe's, and Walgreens. Go look at those charts. Look at Verizon. Starbucks is on the breakout right now, right? Come on, man, keep up. Starbucks is breaking out right now, right? Where's Bitcoin? Back in the box. All these things, all these moving parts are happening every day. We get to participate or not participate. That's up to you, man. But here's what I'm going to do. I'm going to keep an eye on Bitcoin every day for the rest of my life until I die. I'm going to do the same with the S&P 500. If you do that, I promise you, you're going to become a wealthy person. If you keep your attention, not all your attention, you got a girlfriend, a wife, a husband, you got fucking hobbies, other shit you do, you work, you do other things. This just becomes part of your life. Investing just becomes because you woke the fuck up, right? The reason you might have a drink at 5 o'clock is because you fucking drink. You're not asking permission, you know? And investing comes like that. You buy properties because they're there to be bought, right? Think about that. You know what happens to a kid when you're 22 and you get qualified to buy a property? You're 22 fucking years old. And instead of renting and wasting 5, 6, 7, 8, 9 fucking years going, paying rent, doing nothing, paying rent. But imagine if that kid takes just a little bit of what I talk about, right? That much gathers more on every plane of existence, and that loss leads to greater loss. If he gets the concept that more creates more, boom, man, he's fucking blowing past you and me. So from 20 to 27, I don't do nothing. I learn a couple of things. I learned how to work. That became valuable later. I learned about that. I learned about suffering, right? Combat, scared. I learned what you can actually put up with and not put up with. These things, these are intangibles. You can't buy that in a book or a course. So work ethic, you're going to need that, right? That's valuable. But now imagine you got work ethic and the knowledge, and you begin to apply it. So chapter 9 of the free ebook, we're talking about financial fear. And we say in the beginning, one of the ways we protect ourselves is like this. I don't know where it's going. I don't know the future, man. And I'm giving up needing to know. I don't need to know. I'm going to put my mind on other things. I'm going to own different shit. And I'm going to attack them and approach them based on what's happening. And I'm just going to assume what's happening just keeps happening, right? That's my goal. And I want to buy undervalued things and hold them. And when they run up and they get overvalued, I want to harvest some of those. And maybe I sell it all, but probably not. I'm probably just going to keep it, right? So as oil pushed higher, if you remember this, oil pushed up, what did I do? I sold about 15% of my oil holdings. Still way above where we were buying them. Why am I holding those? Dividends. I need the drip, baby. I need the $4,000 that Exxon, Chevron, and Conoco pay me. Come on, man. Give me the money. That has nothing to do with work, man. That has nothing to do with anything. That's because I'm alive. Like, I want to be invested in those. I want to own them. I want the money, man. Because you know what happens if I just keep those for 10 years? If I hold them for 10 years and they keep paying, what happens? Oh, man. Go look at MO. Go look at BX, Pepsi, McDonald's, Starbucks, Verizon, 3M, Cisco, right? AT&T, right? Remember that? Nucor Steel, International Paper, Iron Mountain, right? We know these companies. You know all about Iron Mountain, right? You've read up on it. You get it. Understand the dividend drip. MFA is a mortgage REIT. AGNC, Ford, right? Comcast. We know about Comcast, right? Merck. We know about Merck, right? We know what they do. Pfizer. We know about Pfizer, right? We know about that, right? We know about Warner Discovery Media, whatever the fuck they're calling it. We know about that, right? You know about these things, right? And as you watch, guess what? You've already experienced this the last year as the economy has gone up and down. You have a choice. You can fucking ignore it. Don't look. Don't look. Don't know. And that's the people. Fear of losing something of value is completely natural. It's also healthy if the fear is not too great. Fear is an instinct to help us survive. But when fear immobilizes you, I told you that's what it does to me, to the point you can't act, it's no longer of help or healthy. I mean, it's unbridled fear produces two negative responses. Immobility, that's what happens to me, and rashness, irrational decisions. Fuck it, sell it. Uber, sell it. Oh, fuck. Like, I mean, you just freak out, man. Right? You start doing the what if game. Oh, man, if I wouldn't have owned that stock, I could have bought a car. Oh, man, if I didn't do that, I could have. And you start to play the what you could have done game. The moment you start playing what you could have done game, you didn't even own it to begin with. But we all play that game from time to time. You say, man, if I wouldn't have had the conviction on that, I could have done this. And then you begin to speak in yourself in perfect tense as if you're supposed to fucking know all the time the exact move to make. And yet we'll look at ourselves and constantly do that. Now, we want to learn from mistakes for sure, but maybe it's not a mistake. You go, what do you mean? Well, if I had Exxon at 70 and Exxon fell to 30, is that a mistake? It depends. Right? It depends, right? 5 years later, is it a mistake? Is it a mistake today? No, it's not a mistake. Wasn't a mistake then. Could have been construed as a mistake. Why? Financial fear, man. Chapter 9. Now, how do we protect ourselves from a catastrophic fall in Exxon or Amazon? Pick a fucking, I'm talking dividend stocks right now. But if we have this catastrophic, how do we protect ourselves? Diversification. Different accounts with different things, with money doing different things. And they become like these little segments of your life, man. And this segment right now may be super profitable. That doesn't mean everything should have went into that one because you didn't know that was going to be the one, man. You didn't know that. You know after the fact, and you can feel confident, man, I knew that was. No, you didn't. We don't know, man. We're taking shots. We're taking chances. We might get it right. But that's not going to be the way we're going to become investors over 20 and 30 years, getting every move right in every trend, all in. Like that's nobody does that. Like Warren Buffett doesn't do that. And he's smarter than you and me, right? None of them do that. What do? They own different things, man. When fear takes over your thought process, you won't be able to take positive actions. You should. When opportunities come your way, you'll shun them. Oh, no, man, I don't know about that. You will only see the downside. My God, housing prices are expensive. I know that house with cash flow, but I don't want to buy it if it's expensive. You say, yeah, but it'll cash flow. I know, man. So you take zero action. No action taken. Fast forward. The guy that took the action, bought the cash flowing properties, now owned it for 3 years. For 3 years, it's probably appreciated because what it's doing now, it's probably going to keep doing. And you say, till when? Till it doesn't. And you go, yeah, but shouldn't I spend most of my time trying to get ahead of that and figure out when it doesn't? No. You should spend most of your time trying to figure out what's inexpensive, cheap, and on sale. Most of your time should be spent in where's the best opportunity over the next 1 year, 2 year, 3 years, right? Or 5 years, 10 years, fuck. Right? What do I want to buy? Why do I want to have a dividend stock for a month? That doesn't make sense. Time times amount times yield. Time times amount times yield. Time. Time. How much time do you have? What's the amount? And the only part of that, honestly, that is skills and not mindset, time is mindset, man. Time. It's mindset, right? So we've created this construct of time. You're like, well, does it beat the index, sir? I'm like, over when? Right now? Today? Yeah, I beat it today. No, maybe not. Maybe tomorrow I'm above it. Maybe next day I'm below it. Right? What this guy's trying to gauge is what you're doing beating an index. Well, it depends. What if you own the index too? He's like, what do you mean? What if I own the index? And I don't mind the index beating me sometimes. I own it. Think about that. And you're like, wait, what do you mean? Meaning, I might want to own some assets that underperform for a while. You say, why? So I can get a bunch of them. Why would I not want a bunch of them? If I believe that, yeah, maybe right now it's not the best time for it. But I do want some shit going up too, man, right? Like either scenario could be good, man. If we're backing up and we have different things for different times at different, and it's with new, like you're accumulating in real time with new money, right? You're bringing in you, man, your heart, your soul, your energy. You go out here and work and people pay you for your time, your talent, or your skill. That's your human energy, man. It's given to you in currency. We call it US dollar, but here you go. Could be in fucking yen. Here, you want it in Bitcoin? Here, there's your money. That's what you get for your time, your talent, your energy. What do you want to do with it? You want to grow it? Or you want to eat it? Drink it, smoke it. Like, what is it you want to do with it, man? What do you want to do with your time? And people a lot of times think of time is just where they're spending their days. No, man. Your time is a currency, man. Tick, 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 tick. Right? If there's no money, tick, 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 tick. That's one of the most valuable commodities, man. You get what I'm saying? That time. You say, what do you mean? Time times amount times yield. So if I own Exxon for 5 years and I had $20,000 in it, and I've been consistently adding to it, and my friend does not own Exxon. He's not been adding to it. You tell me. You got to be a fucking Einstein to figure out one guy's building wealth and getting richer, and one guy's not. Not only is he not, he's literally going backwards. You say, what do you mean? Meaning he's buying gas, oil. He's going to the store, to the gas station, filling up, bitching about the price. The guy that owns $100,000 of Exxon, he ain't bitching about the price. Is he? I don't know. Maybe he is. You get what I'm saying? So when they talk about stocks beating inflation, that's one of the ways is they are giving back into your life. Over time they go up. They produce a drip. You compound it. Right? The master key says that much gathers more is true on every plane of existence, and that loss leads to greater loss is equally true. Mind is creative, and conditions and environments and all life experiences are the results of our habitual predominant mental attitude. Listen to what he just said. I lost most of you. Mindset, your thought process, philosophy is creative. What does that mean? Creative is an adjective, man. It means let's go, man. Move, think, run, go, write, talk, speak, backflip, go, man. Creative energy, mind, it means it's moving forward, man. So if you're immobilized due to fear, remember we said it does two things. One, it immobilizes some people, me. And the other person, they start making irrational decisions, right? It's creative, man. Mind's creative in conditions, environment, and all life experiences. Our experiences. Listen to this. Are the result. Your experiences, my experiences, the shit I've been through in life, the shit you've been through, are the result of our habitual What does habitual mean? That's kind of a negative word today. Habitual means what? Man, he's a habitual drug abuser. Like, endless, habitual. Oh man, what if I said he's a habitual investor? Look at small-time real estate. He's habitual. That guy's an habitual investor. People say, man, that sounds kind of bad. Yeah, it is. It means he's out of fucking control. He won't stop doing it, man. He won't stop buying houses. That guy will not stop buying stocks. He's habitual. He will not stop working out. He will not stop working on his business. He will not stop launching that new opportunity. He will not stop. He's habitual. That's what that means. All our experiences in life are the result of our habitual or predominant mental attitude. In other words, what are you thinking about? You hear me say it all the time. What you think about comes about. I'm simplifying the complicated, man. That's what this is. You don't have to die broke. I'm simplifying the complicated. Man, toward the back, I know some of you guys blew right through it. You're like, oh, REITs. And it's like, Do you know why they're called REITs? You know when Congress passed the law regarding REITs? Do you know how much money? Do you know REITs? Did you spend some time with it? Did you fall asleep reading it? Right? What is that? Mind is creative, right? Mind is creative, and conditions, environment, all life experiences are the result of our habitual and predominant mental attitude. Are you falling asleep? Right? That guy's what? He's habitual. He won't stop, man. He's internalizing it. Once you internalize something, it just becomes what you do. I've been doing that with this harmonica, man. This is how you get good fast on an instrument. You just do it all the time. You got 5 minutes? If you got, you just do it. Bust that out 20 times. Stop. Go do something else. Right? Hour later, do it again. 20 times. Hour later, do it again. 20 times. That same fucking lick. Over and over and over. Do it for 3 days. Over and over and over. Every day. Guess what happens? You've done it like 300 times, man. Your body can just start to do it. Habitual. Experience in life are a result of our habitual or predominant mental attitude, what we're thinking about. So the way we overcome financial fear, one, through diversification, that's to protect ourselves from ourselves. You may have a great idea, and maybe, looking back, should have went all in on that. You can't know that. And the world is littered with people who blew out, that if all they would have done is just some basic diversification, or some basic, beginning with just like doing this smart, not taking on that debt, right? Get out of that stuff. Like fix the shit, the basics, right? And then you can make those big moves. But if you're making those big moves and the base is fucked up, right? Like things are messed up, man. You're going to blow out. You're going to blow out. So there's nothing wrong. What I try to get people to do, man, if you feel something, yeah, man, you got to do what you got to do. You don't listen to the guru then. Fuck, I get it. You don't listen to the advisor. Maybe you tell Dave Ramsey, go blow off, bro. I need to get a car loan. And you make a bet on you because you know you can pay it off fast. So you're like, hey, I got it. I've done that. I'm totally against debt. I'm like, give me the papers. I'm going to pay this guy, man. I know that. I know me. I'll drive fucking, I'll do whatever, man. Knock on the door. Hey, you want to buy some cookies? Like, I'm going to pay that off, man. That's never been a problem. My mental, I know what's up, man. I know what's up. So I want to, if I'm going to be in that game, I want to abuse them, man. I'm reading this thing with Grant Cardone last night. I'm not a big fan of credit cards, I'm going to be honest, in this book. But I personally use credit cards. And I use them like he does. They are a ledger for me. It's the blockchain for the money flow system, man. When you go, what do you mean? Man, I can't keep receipts, dude. Do I look like a guy that keeps receipts? Do I look like I want to be an accountant? I don't keep receipts. I don't need to. Discover does it. So here's what I do. I got one card for rental properties. One for mine, one for corporation, one for partnership, one for online business, and one for personal. Whichever one it is, that's the card you use. And guess what? You get a fucking ledger. You could import that shit right into QuickBooks if you wanted. Wada boom, right? You're using them, and you're using their product. You're using the ability to borrow to your advantage. That's different than putting furniture on there. We need this, we need that. No, we don't. We don't need that. You know, we don't need that. And if you get trapped in that cycle, man, of putting all your life shit on there and you know you can't pay it, right? Then that's debt. That's what I'm talking about in the book, man. I'm not talking about the guy that's paying off his card every Friday. Yeah, bro, you good. You internalized it. You understand what we're talking about here. The attitude of mind necessarily depends upon what we think. There's also a level of sophistication. And you go, what do you mean? Maybe if you're just getting going as an investor, you don't need to invest like Warren Buffett. Like, you don't need to do some weird, crazy shit. Maybe just the basics, man. Maybe just consistently put money into an account that owns some pretty decent stocks consistently and do that shit for fucking 6 months. Like, do that. Just do it over and over and over and over and over and over, right? In a basic strategy. I teach that, the dogs of the Dow in there. Most people can't stick to that, man. Most people can't stick to that for 2 fucking weeks before they're, hey, what about this over here, man? And I'm like, I thought we were doing these dog things, man. I know, but I got, what about an NFT? All right, I guess. Yeah, cool. Buy one. Now, get back on this. Yeah, but what about, yeah. Now, in one sense, that's a way to build out your portfolio, right? You're doing these things. So in one sense, that could be good. But not if you're turning them over all the time. That's just called chaos and confusion, man, right? So, if on my other account, I was telling people, hey, print off all your dividend stocks. Print them off, man. Get them in a page, clip them. Mine started out as one, AT&T. Now there's like 70 fucking things. So it's like 2-3 pages of stock. But that's 20 years of buying shit, man. Some of them I bought with $500. And $500 was a lot of money, you know? Maybe I had a little score and I got $2,000. Cool. Send 5 to E-Trade, put 5 in checking. Maybe I made 7 at work and I put 6 in checking. I send 1,000 to the SEP IRA, the IRA, right? We're trying to stay on track. We're trying to put at least 100, 150, 200 a week into buy and hold shit, man. That should be everybody's goal. Minimum, man. And sometimes more. Some of you guys are making way more, man. Way more. You can't. No, we're not buying. Jimmy, we're not buying Uber, bro. First off, 3-day rule. Stock drops by 10%. You shouldn't be buying it. You don't know why the fuck it dropped. You don't know what's going on. Maybe the CEO got caught in an affair. Maybe there's fraud. Like, we don't know. Right? We got to go look. The 3-day rule is to protect you from you. Dealing with financial fear. Unbridled fear produces 2 negative responses. Immobility. Do nothing. That's what I do. Rashness. Irrational response. Buy it. It's down. Buy it. Right now. Did we look? Do we know why? No. Oh, but one of the rules of the money flow is whatever it's doing now, it's going to keep doing. Remember? So we're below the 20. All the indicators have turned over. We're now in a stage 4 decline. I assume it's going to go lower. Until it, what? Doesn't. And how do we know it doesn't? Puts in an anchor point, starts to go sideways and builds a box. We do this on the charts all the time, man, right? Stage 1. Then what? We start to nibble. That's going to take days. During the meantime, we go read. What happened to Uber? What's up, man? Read an article. You read a good one, then go read a bad one. Go back and read a good one. Go to the company website, click fucking earnings, go down there and read the shit yourself. And just read through it. And you say, but Gerald, I'm kind of, I didn't make it past 8th grade. It don't matter. Just read it. Read it like you own the place. Let's see. What happened, man? What happened? Go through it. Doesn't look that bad to me. What happened? Then you can go look. You go to the market and say, why did the stock market respond like this? And you say, whose market? Mr. Market. That's the guy that prices it every day. That's the general consensus of all the people bringing their emotions to the stock market every day. Every day, they fucking wake up and look and go, let me see what's going on here. And they have some sort of emotional opinion. I don't have that. So if it drops that big, I do nothing. I need to go read, man. I got to go see what happened. I'll read it. Make sure it's nothing illegal. If it's nothing illegal and we're still on the same game plan, changing the world, transportation, is that still the plan? And they're like, yeah. All right, are we making money? Yeah. But we lost some. All right. Wait, our type of stocks are out of favor right now. Yep. So any growth stocks posting a miss are getting smashed, right? Yeah. All right. So this is kind of normal. Yeah, kind of normal. Lyft got hit. So we start looking and we're like, yeah, all right. Is it over? Do we think it's going to zero? I mean, is that it? Are we done? What do you think? I don't make decisions based on the price going down. I make decisions based on the game plan is fucked. We can't do this. We're not going to win this war. It is impossible. They are going out of business, or maybe it's just a bad time. Like maybe oil went to fucking zero. You know what happens to Exxon when oil goes to zero? Exxon goes to $25. It was 70. What's Conoco do? Like 21. It was like 70. What does Ford do when they don't sell any more cars? It goes from 12 to 4 when they cut the dividend, right? That makes sense. Does that mean we bail? Maybe. Maybe not. Maybe it's an opportunity. I don't know your time frame. I know if I was 20, man, this is nothing but opportunity. It is Roku. It is all these things, man. These companies, the PayPals, the Squares, those aren't working right now. But if your time frame is longer, right? And you're really not that concerned with dividends and shit like that. Like you have more money, then man, I'd be all over them. I'd be all over them, man. So when we live in an age where we're bombarded with information. You need to understand that most of that information is wrong. The major media are almost always wrong about investing and the economy. Wrong. Fuck Fox News, CNN, CNBC. They're wrong. Sometimes they're accidentally right, though. When prices are moving up, they report all the money being made. This causes the masses to jump in the market. Well, guess who the masses are buying assets from? Smart money purchased these assets when the masses didn't want to own them. And as prices drop, the media reports stories of money people are losing. Most people believe major media. They think, how could all these experts be wrong? So due to fear, people will wait on the sidelines, waiting. Man, real estate's expensive right now. I know. But we keep looking. I had a kid the other day, he said, Gerald, do you think prices are too expensive? And I said, how much money you got to invest? He said, what do you mean? I said, in real estate, how much money do you have to invest? He said, $10,000. And I was like, bro, real estate's always been expensive for you. He didn't get it. If you got $10,000 to invest in real estate has always been expensive to you. Not many times, never in my life. I've been buying real estate for 20 years. I'm trying to think if I've ever put $10,000 or less down on a house. On a deal, I should say. I've bought 2 houses together at least or twice. No, man, I can't think of any time I ever invested $10,000 and got real estate. Oh, wait. No. A plot of land. I put $8,000 down on a plot of land. 7 years later, I flipped it. So do you get what I'm saying there? He says, do you think it's too high? It's like, how much money do you have? And he said, he told me what he had. $13,000, $10,000. And I said, real estate has always been expensive to you. In other words, you need more money, man. Your problem isn't the prices of real estate. Your problem is you ain't got enough money. So you're focused on the wrong thing. So you don't need to worry about that right now. What you need to worry about and put your energy on and put your focus on and be habitual about is getting more money, right? Where's it at? Mind is creative in conditions and environment, all experiences in life, like buying a house, owning a property, being a property owner or landlord. Environment and all experiences in life are the result of our habitual, predominant mental attitude. Well, guess what? Your mental attitude needs to be, I don't have enough money to buy a house if they're cheap. $10,000, not enough money. Even if they're cheap, even if they come down 20%, it's still not enough money. So it still ain't fixing the problem. Focus on this. Because the moment you go, yeah, they're too expensive, you start to slow down. Oh, I got time now. Oh, shit, let me relax. They're too expensive anyway. Let me just sit on my $10,000 like a chicken trying to lay an egg. Just sitting on it. Like it's going to do something. It ain't going to do anything, man. Your $10,000's just sitting there. Right? Now, if it's been assigned for protection, if it's a do-over account, That's different. That's not what I'm talking about, man. A lot of people want to invest your do-over account. That's not the point of the do-over account. The moment you invest a do-over account, it's not doing over. It's fucking invested. So now you don't actually you have more investments and you don't have a do-over account. And you say, well, I'm going to pull from my investments when I need that. All right, well, I hope it works out for you. But the whole point of the do-over account is so you don't have to pull from your investments, so you can let it compound, man. We don't want to be in a situation where we have to. Yeah, $10,000 not enough money, man. You got to get some more money. That's not, man, come on, man. That's not hard, man. Today, man, you need 20 to probably 30 grand to get going. Man, is it possible to do it cheaper? Yeah, but you really need 20, 30 grand. Like my man there said, 25 to 30 in most markets would get you in the game. You got 30 grand right now, you can find a house. I'm pretty positive. And you're like, well, not in New Jersey. Yeah, if you're willing to drive, you can. I'm sure outside of New Jersey, if I keep driving, I'm going to find a house that I can get with 20% down with $30,000. You just stay on the road. Eventually, you're going to hit a town, pull up realtor, and you say, but how would you find such a town? You just get in your car. That's one way. You can do it at home, too. You can just get on the computer, man. Get a map and start finding areas around there and go, wow, I didn't know this. Up in this area up here, there's $150,000. Yeah, there you go, man. That's where you're looking. I got that, but I got no pay stubs. You don't need pay stubs, man. Fuck, man. You don't need pay stubs to get a loan, man. You need a checking account. You can't go to a normal mortgage broker. You can't go to these guys you see on the side of the road with a sign up that says mortgage lender. Bullshit. They're packaging. They're trying to create mortgage-backed securities. Most of these ones on the internet, these people, these lenders, they're creating mortgage-backed securities. They're making their money on that fee, man, for doing the deal. And then they're packaging it, putting it with other people. And so the fact that you don't have a job bumps you out in being a grade A mortgage-backed security, man. They're going to take 1,000 loans that are exactly alike. Look at Tom, age 30, blah, blah, 754 credit score. He put this much down and blah, blah, blah. And you add it up and you have so many of them. They're exactly the same. They bundle them, create a mortgage-backed security. Companies like AG&C, MFA, NLY. That's what they do. They buy those things, man. Then you can get a loan, bro. There's people that'll do. It's called a checking loan, man. Get a loan on your checking account. You got to get a loan on your checking account. You got to be making money. They're not going to loan you money if you're not an earner. You got to be an earner to get loaned money. You don't have to have a job. People that write books that make money get loans. I got a loan to buy a 200-year-old house in New Orleans. I don't have a job. No job. No GPS, no website. Humans used to just hit the road in search of opportunities. Yes, they did, man. Financial fear, baby. It's a real thing. It can also make you take irrational. Don't do either. Wait on Uber, man. The kid had asked me that. Wait on it. You probably didn't mean to today. Maybe I'm picking on the choir. Sometimes I don't know the context of the question and I just use it. And if I pick on you, just take it. Don't be a little, don't be that. That much gathers more is true on every plane of existence, and that loss leads to greater loss is equally true. Mind is creative, and conditions, environment, and all life experience is a result of our habitual and predominant mental attitude. I can get a fucking loan. Someone will loan me money. Don't ever say again, I don't have a pay stub. You don't need a pay stub. You don't need a pay stub, man. Keep asking other people. Going to research a checking loan after this live. You guys didn't know about checking account loans, man? Come on, man. There's a lot of ways. And then there's hard money lenders, of course. There's hedge funds lend money to real estate. If you get a deal that can stand on its own, if you have a property that can, not a one door, it can't be a one door, but let's say 10 doors, 12 doors, 20 doors, and you got the money for the down payment, you're putting down 30, 40% down. Probably 40 be better, but 30, there's people that are loaning you money on it, on the asset, meaning if you don't pay them, they're taking the deal and keeping your equity. So you're pre-funding your loss. So if it's $1 million and you got 300,000, put it down. They'll give you the other part. They're going to be your partner, and you're going to kick money to them. And that money goes right to the hedge fund or whoever the lender is. And they might charge you 7-8%. If the deal cash flows, who gives a fuck? I know people that don't buy real estate because somebody else got a better interest rate. I'm like, what? Yeah, but my buddy got a 3.7, Gerald. Who gives a shit what your buddy got? Buy the deal. Time times amount times yield. If the deal cash flows and this is the person that'll loan you the money and it's going to work, the deal's going to work, you don't give a shit that somebody else got it 0.5% or a little more. It ain't none of your business. This is your deal, your money, and what they're offering you. You know, now you could walk on it, but there are people who will end up not buying properties because the interest rate changed. Oh, I can't do that. The interest rate changed. It's going up, Gerald. Okay. I bought houses at 8.7. I bought houses at 6.7. I bought it at 5.5. My cheapest one was 4.1. Investors don't get 3%, man. Investors don't get 2% loans. Homeowners do. The people that get 2.1% were homeowners. They know you're going to pay that. Homeowners are one of the least riskiest investments. That's why the bank will do it at 2-3%. They'll just take your fucking house. Ain't a big deal. Now you get into 20, 30, 40 doors, they're a little more concerned about you. Like, who's this guy? Who's this human being that's decided that they don't want one house, they want 30 of them? That's a lot of superpowers, man. You got to get up with fucking intention. And you might have another job and a wife and kids. You might be dealing with stock market crashing, all this information coming at you. You better be strong mentally. You better spend time every day on your mind. I didn't say fucking meditating, although that could maybe be part of it, but more working on your mind. Like, and when I say working, I don't mean you have some calm, relaxed, oh, I'm so relaxed. No, man. Like we said it in the beginning, fear is a natural response, man. You're supposed to have fear. Where's it at? Fear of losing something of value is completely natural. It's also healthy if the fear is not too great. Fear is an instinct to help us survive, man. Shit, being uncomfortable is good for you, right? A lot of people are too soft, man. Oh, I need my dinner just right. They get mad because there's no butter. Oh, what do you mean, man? We're out of sugar? And they freak out, and it's like, you know, some people used to have to kill the animal, drag that heavy fucker home, cut him up, sling him up. Takes hours, or they had to grow it from the ground. All you had to do was hit a button on your phone, and you're pissed about the salt. That's where we're at, man. Some of us are soft, man. You mean you don't have these in blue? They're like, no, we don't got them in blue. Come on, man. Imagine Little House of the Prairie. Oh, you have pants? Can I see them? Do you have pants? Can I see them? But that's where we're at, man. A lot of us are soft. We're that with our investments. What do you mean? I bought it. We're kind of soft, man. Me too, man. So you got to check yourself sometimes. Damn, I'm kind of soft on myself. I only work out when it's nice weather. I want the gym to be exactly 74. Woo, this water's too hot. Right? What about this? Everything. It's like, my seat. When you get in the fucking car, it's got to be perfect. Let me get my phone. I need this juicy case. Look at this case. Look how awesome this is. Look at this hat. What do you think about my watch? Man, I just got what do you think? Oh, man. Wow, yes. Wow, that was a long one. This was Wednesday Motivation. I appreciate you watching my YouTube channel. Follow me on Twitter and on Instagram, everywhere we're on. Be sure to visit thepetersreport.com. Hey, come join us in our private society called the Money Flow Trading Society. Like-minded people with a common goal, with a common purpose. Jesus said where two or more are gathered. It's a universal principle. More gathers more. We like to help you gather more. God bless.